All right, everybody. Tuesday, July 16th. First, an announcement. My video production may be a little sporadic over the next few days because I will be traveling to California with my daughter to check out schools, colleges. So I'll try to make some videos, but it may not be as regular as the ones I put up every single day. So please be patient. Just wanted to mention that. So today, market is kind of undergoing a little bit of a pause. By the way, in the last 2 days, interesting, we have seen both days, yesterday, Monday and Friday, we had that big day, 224 points up on the Dow, new all-time record high. On both of those days, we saw the put-call ratio go up, okay? Didn't go down. Now, when the put-call ratio goes up, that means more put volume compared to call volume. So there was more pessimism, there was more skepticism into that rally. However you want to label it, it wasn't an overly bullish sentiment day, at least when you look at the put-call ratio. So I thought that was interesting. And you know, I look each week at the AAII Weekly Sentiment Survey. That's the American Association of Individual Investors. By the way, that's free. That goes out. Everything I talk about here, with the exception of my report, which really synthesizes, see, that's the key thing. And you could have mountains and mountains of free data. I mean, I tell you out there that you can go get the daily treasury statement every single day. That's free, government supplied resource, a free resource. You don't know what to make of it. That's why you got to buy my course, Understanding the Daily Treasury Statement. But what the MMT Trader does is it synthesizes all this information. It synthesizes information on fiscal. It synthesizes information on bank credit. It synthesizes information on reserve flows, on oil, what's going on. And that's the other thing. I talk about the EIA every week. And the zombies, they jump in because they see a headline, right? They see a headline that says inventories are up or inventories are down. They make a move on that. I take their money on that. There is so much more information in that report, but you have to know how to synthesize it. Anyway, what I was saying was the AAII survey now still shows a below average level of bulls. Believe it or not, we're over 3,000 on the S&P. We're at all-time record highs. We've been making consecutive all-time record highs. We are below the historical average on the percentage of bulls. We are below the historical average on the percentage of bears. Now that might be a little bit of a caution sign, but we're not way below. We're about 10% below. And we are still way above on the percentage of neutrals, people who would classify themselves as neutrals on the market. And I've said that's the key. I think if you're looking to play a top in the market, you got to wait until those neutrals jump off the fence into the bullish camp. And I've been saying this all along. I've been saying this for months. I think that's how it's going to play out. The market is going to go so high that all these people who have been neutral for so long, they're just going to throw in a towel and they're going to say, that's it, I'm buying this market. And we're going to be at, I don't know what, 3,200 on the S&P or something like that. You'll see. You'll see it happen. I'm telling you right now. The other day I sent out a thing about, or I think I made a video and I sent out, you know, as part of my report, I sent out daily updates all day long. Updates, email updates. We're talking about the bond market. And not to rehash this again, you know, because I've said it so many times ad nauseum, but of course this is the big rally in the bond market really came when we hit the debt ceiling. And you know everything I talked about with the constraint, the inability of the Treasury to sell new debt, and at the same time the Fed bringing reserve balances down, so the banks lost that Tier 1 asset. They had to replace it with another Tier 1 asset, Treasuries, and you could see it clearly in the data. The amount of Treasuries bought by banks, once that debt ceiling hit, it was going like this, then it went straight up dollar for dollar in the amount of reserves that were lost with the amount of treasuries that were replaced. So you got to be very careful about making assumptions on interest rates when the debt ceiling is in place, because it totally distorts the picture. And what happened was that giant technical bond rally, and I don't mean technical in the sense of charts, I mean technical in the sense that the banks had to buy those treasuries to replace the lost reserves. That pushed down yields, and everybody was looking at yields saying, oh, we must be going into a recession because look at what's happening to yields. But that was not what was in play. It was the incorrect reading of what was going on. And even the Fed was guilty of that. They're like, oh, we better cut rates. We just had a 225,000 payroll gain last month. And now there's still people out there talking about a 50 basis point cut as insurance. We saw a huge increase in June in retail sales, just came out today. And they're talking about rate cuts. So under normal conditions, you would never have the Fed considering a rate cut right now. But because Powell is looking at the market for leadership, doesn't understand that the Fed is a monopoly entity, a monopolist in rate setting, it dictates, not the market, but that's not the way he understands it. All these guys, like lemmings running off a cliff, they're all looking at the market saying, oh, it's saying we got to cut rates, we better cut rates. Not even understanding, there has not been one, and I'm saying this again, I'm sorry that I repeat myself, but repetition is how people learn. There's not one other person out there in the whole entire universe who is connecting the dots with respect to the debt ceiling and what has happened in the bond market. So anyway, that's the thing you got to be watching for. Every day, I'm Googling every single day debt ceiling in the news. What's going on between Pelosi, the White House, Pelosi, Mnuchin? Are they any closer? That's the thing you got to be looking at right now. Because, and by the way, I think, because what is the sticking point here? The sticking point is that the Democrats want dollar for dollar increases in discretionary spending and military spending. So the Republicans want to increase military spending. Again, it's been up like insanely crazy. They want to do more. But the Democrats are saying, and Republicans are saying, but only military. And the Democrats are saying, nuh-uh. We're not going to do a debt ceiling unless we also raise discretion. So what could happen I think what's going to happen at the end of this is a super bullish thing, whereas now we are at record levels of spending, and then they're going to add to that, and the Fed is going to cut rates. It's going to be, it's going to be like really throwing gasoline on the fire. Really. But you got to know. We know. I do the fiscal stuff every single day. I send it out to my people. We know. That's how, you know what? When you know, you could have absolute confidence when you trade. And when it goes against you, you're not freaking out. You're not arbitrarily stopping yourself out, because you know. And you can have comfort in that, and it gives you confidence. That's the difference. That is a huge difference. You cannot put a price on that. Oh, well, you can. It's $250 a month with my service. Soon going up to $1,000. All right, everybody. Remember, a little sporadic on the videos, but I'll try to keep them going. Bye-bye.